In early March, H.R. 5958 was introduced to Congress. This bill will provide millions of American seniors with billions of dollars to pay for health care needs. Also known as the Senior Health Planning Account Act, the proposed legislation is a major milestone, providing seniors with an alternative way to afford and plan for the rising cost of health care using tax-free funds, including the rising cost of long-term care. I'm joined today by Mike Coben, Chief Distribution and Business Development Officer at Lighthouse Life, to talk about how this can impact the financial services industry. Mike, to get started first, give me a primer on this new bill.
Well, first of all, I want to thank you for the opportunity to be with you today to discuss such an important topic in today's world, and that's the concern for the rising cost of care for seniors. So the premise behind this new bill is that a senior can establish a specialized account, invest in it, and use the proceeds of the sale of a life insurance policy through a transaction called a life settlement to help pay for their future care. And if the distributions from the account are used for qualified medical expenses, very similar to an HSA, then those withdrawals would be tax-free. And any earnings in the account as the account grows will be tax-deferred as well. So it's a unique opportunity for seniors, and it's a unique opportunity to use the life settlement transaction as a facilitator towards the savings for long-term care and healthcare issues.
And we've been talking about this healthcare cost crisis. Can you just explain for us the scope of that crisis and how advisors can help their clients?
It's dramatic, and we see it in the news all the time. The Wall Street Journal has articles. The press in general has articles in terms of the real concern for the future of care. And as an example, I believe Fidelity in 2019 put out an article that had some statistics, and one of the most salient statistics I saw was that the cost for a couple, husband and wife, male, female, age 65-ish, would be, assuming they're healthy, would be projected to be about $285,000 over their life. Now, assume that they ended up getting hit, unfortunately, with some medical ailments. That cost can only grow exponentially, and the concern and the worry about that is only going to be exponential. So the advent of this new legislation, which we hope will be adopted and move forward, could help defray some of those concerns.
It sounds like advisors really have a challenge ahead of them helping their clients plan for the future. How can life settlements fit into an advisor's practice?
So if we step back, and I reference life settlements as the vehicle to be used to fund these new accounts, a life settlement in its plainest terms is a sale of a policy for an amount that is greater than its cash value. So when people purchase life insurance, they purchase it for very good reasons. As a matter of fact, I'm a staunch believer in the use of life insurance as part of an estate plan, financial planning in general. But through time, the needs for that insurance may dissipate, and the cost for the insurance may actually become prohibitive in terms of continuing to pay the premiums. Especially as you get older and in your senior years, 65, 70 years old, the need for the insurance that you purchased years ago, 15, 20, 30 years ago, may totally be unnecessary. And the costs could be unbelievably exorbitant relative to what the projections were in the past. So many people don't realize that the value of their insurance could be monetized for an amount that on average could be 4 or 5 times greater than its residual value, meaning its cash value today. And many advisors are approaching clients now as they get older, and they provide traditional reviews for their assets. They include insurance as one of the assets that they want to review, or they should if they're not. And during that process, they may suggest to value a policy to see if it has value, and it can be monetized for current needs, whether it's current retirement needs or protecting against future long-term care needs. And one of the things that's interesting is it's a highly regulated market. 43 states now currently regulate the market. It is right in line with the concerns for suitability and best execution in terms of the advisor's responsibility to provide all the options to a client. And quite frankly, now with the use of the proceeds to be able to be placed into this specialized account specifically growing tax deferred and being able to use for qualified medical expenses on a tax-free basis in terms of its distribution can only expand the use of life settlements.
So, Mike, it really sounds like this new legislation and life settlements fit into a conversation about acting in your client's best interests.
Absolutely. Melanie, as you know, best execution, suitability, that's paramount in today's world, especially with the bright light in industry trade magazine articles and also articles that clients may read in the Wall Street Journal. And providing the option of a life settlement in terms of at least approaching a client with the knowledge that they may have an exit strategy for an unneeded or unwanted asset, a life insurance policy that they may not even be aware of. And they may choose to execute, or they may not choose for their own reasons, but at least providing that information, in my mind, meets their standards, meaning the advisor's standards to uphold to the heightened suitability and ethical standards that are really needed in today's market, providing clients all the options available on the table and let them decide on an educated basis and an informed basis on what direction they want to go into. And as a matter of fact, we at Lighthouse, we work directly with financial advisors, assisting them in that process, providing value, efficiency, and transparency that meets the standards of suitability requirements that are out in the industry today.
All right. Thanks, Mike. And we'll all be watching the Senior Health Planning Account Act as it moves through Congress.
Thank you very much.
All right. And if you'd like to learn more about the new legislation or how life settlements can fit into an advisor's practice, visit lighthouselife.com.